Hello and welcome to this short tutorial about the project skills for New Horizons. So in this very short tutorial, we are going to discuss about the financial plan. So what is a financial plan? It's a useful tool to determine whether your business idea is viable and for convincing financiers to lend you money. Therefore, it forms the basis for your financial pitch. And it's mainly done by two elements, the projected startup costs and the projected profit and loss. Let's see in details those two elements. So the startup costs. And here you should insert all the costs that you actually need in order to start. Let's see very briefly how this sheet works. Let's see the first voice, for example, advertising and marketing. Okay, so we have a startup costs of 3 months before we see any revenue, right? And what do we need to run ads? Well, we need a computer, and that will be a one-time cost because we need to buy that just once, right? Plus, we'll spend 300 a month in terms of advertising. So 2000 plus 300 times 3 months equals 2900. And the same formula is applied for the whole sheet, right? In this way, we can estimate the startup budget that we need in order to start. And then we come to the profit and loss. That's fundamental for any potential investors and should cover at least a projection of 12 months. If longer, even better, right? So let's see how this sheet is composed. So we start with revenues, right? Revenues is everything that your company makes, right? So could be the subscription of your sports activity, could be if you have a corner in which you sell physical stuff related to sports. Also that comes as the streams of income, right? And let's see how that can be actually divided, right? So we have the estimated sales plus, I don't know, any sales, return discounts, and etc. that determine the net sales, right? But we might have also costs of goods sold. Let's make that very easy. I sell swimsuits, for example, because I run a swimming pool, and I buy that from €1, and I resell them for €5, right? So my margin actually is €4. My revenue, it's 5, right? But every time I make $5, €5, I actually have to spend $1 to pay the item from the factory. You might also have subscriptions, so sport businesses might fall under the service industry, and in this case, the cost of goods sold is the monetized value of the item spent on the client, right? This way, the estimated sales minus the cost of goods sold determines the gross profit, okay? From that, we have expenses. Expenses can be many, salary and wages, marketing, and etc., right? Those are divided by month and determine the total expenses. From that, we can determine the income before taxes. The income before taxes is very easy, all right? Is our gross profit minus the total expenses. So if you do 3,000, my bad, minus 6,500 equal minus 3.5K, okay? And the formula is applied through the whole sheet, right? We have to remember that we have to pay taxes. In this case, they are negative because we are under, then they become positive. And this way, we determine the net income, right? That is actually very far from our, revenues. You see how many steps there are in between. So let's quickly see the formulas. Net sales minus cost of goods sold equals gross profit. Gross profit minus expenses equals income before taxes. Income before taxes minus income tax expenses finally determines the net income. All right. I hope that was clear and helpful, and good luck with your businesses. Thank you very much.